Yes, let me start by confession. I have no expertise in vocational training, nor does my organization, Center for Civil Society, have any expertise in vocational training. I think our only claim to fame, and the reason why I'm actually here, is idea of a skill voucher. We produced a small booklet some time ago talking about how can you use different methods of financing to provide training. Now voucher, I think many of you know, we have been using that term since the morning, so it's not a new term to this audience. But we began actually working on this idea for education before we actually came to the vocational training sector with the idea. And a voucher basically is using public funds to empower individuals to access goods and services provided by private players. Right? So basic idea is that how do you maximize the effectiveness of public funds, whether they are used for proper education, say K-12 or college education, or whether they are used for vocational training, right? Or could be anything else. It could be actually PDS and many other things for which we use public funds. So general idea is that can you apply a different way of providing or guaranteeing those services and goods without actually government producing and supplying those services and goods. Right? So typical, say, a public school, government pays for it, government runs it, right? Everything is done by the state, and people of course get the education for free when they go to public school. So instead of doing that, if government actually gave a voucher to the students or otherwise who go to public school, would that actually improve the effectiveness of use of public funds and of course the outcome of education or training or whatever that may be. So that's the in general thrust of the idea of vouchers. As you can see, it's not just a particular piece of paper called voucher. It's actually a concept that can be applied in different ways in different situations. Right? So you could have a sort of voucher which could be something similar to conditional cash transfer. Right? So where you actually are giving money to people. Not only that covers the cost of accessing the service, fee that you have to pay to your school or training institute, but also gives you some extra money to cover your opportunity cost. Like the fact that you are not working and earning some income, you're foregoing that income by going to a training program or to school. So can government cover that part of the cost? Right? So idea of the voucher is that you can apply that in different ways in different contexts. Now, here the focus largely has been in our discussion so far, giving vouchers to individuals, and then who then access the training from training institutes. But it doesn't have to be that way. Actually, one of the first study we did in here, we talk about the country Kenya, which actually first began giving vouchers to small enterprises for the employees as well as the owners of the enterprise to acquire higher level skills, whatever they may be, right? So that's how it actually started. So you can think of that also quite applicable in the Indian context. Right? It's not just giving it to individuals who solicit or who want training, but giving it to enterprises, small and medium scale enterprises, who can then use these vouchers not only for their own employees, but also for the owners of these enterprises. So there are various ways of applying this idea. Also in terms of funding, so you can have 100% financing. Everything is paid through the vouchers, or you can have joint payment or co-payment. Right? So 80% is governed by the voucher payer, could be government in most cases. Remaining is paid by the trainee. Right? So 20% cost comes from their own pocket to address the issue that we were discussing earlier in terms of incentives of the trainees. Right? So you can also design vouchers in that manner. Other idea just occurred to me in this morning session. We're talking about loans, and that's one business that you are in. Right? You can actually, instead of giving cash as a loan, you can give a voucher as a loan. So that also reduces your costs in a sense of collection, because voucher is a very specified amount of money that is given to an individual who can only use it for training and nothing else, unlike say microfinance, where we know much of the money is not actually used for generating businesses, but for smoothing out the consumption ups and downs. So voucher actually is another way of applying it in a context where people have not thought about it. So instead of giving a loan, we give a voucher. We have a couple of ideas, but let me stop there. Siddha was told not to speak for more than 2 minutes. We'll come back to that Q&A.